Good evening, everyone. I think very insightful panel one. Lot of insights on what has happened and what's happening on the IT side of the world on AI. Again, this one is important because when we were talking about the money coming from the finances, the boardroom is asking for, what money are you spending is the justification to those KPIs. So how are you bringing value to the table is very important. Quick introduction. My name is Pankaj Mittal. I run a boutique consulting firm for virtual CISO and CIO advisory, 6th year in running, and a lot of them are old faces I know for long. Right, so I will get started quickly. If you guys can just take 30 seconds to introduce yourself. Makarand?
Yeah, I'm Dr. Makarand Sawant. I'm currently working as a director and CISO and then CTO of the organization. My role is as a board member to make a responsive and responsible use of technology for the organization. I work for CIFB.
Rajeev?
Hi, good evening. I am Rajeev Mittal. I am CIO of Endurance Technologies Limited.
Hi, this is Pinkesh Ambavat. I am working as a CIO for CRIF India. CRIF, I'm not sure how many people you know CRIF, but most of your data is with CRIF, so
digitally.
managing the India and APAC and Middle East region for CRIF. That's it. Thank you.
Martin?
So yeah, good evening everyone. Myself, Raj Martin. I'm a CISO in Encash. It's a fintech company. Obviously, we closely work with CRIF to assess our customers' data as we sit together.
Right, so good to have you all here, but boardroom expectations and digital KPIs. So I joined an organization and they says, what is your roadmap for 30, 60, 90 days? And then they say, what is your KRA KPI? So are you defining or are we defining? And then the entire paradigm changed since I moved from one side of the table to the other side of the table. So now I'm helping write the KPIs for folks like these. But I will jump in with some set of queries I have put in. Makarand, I will start with you. How do you see this boardroom defining this success in digital transformation? My understanding it's the most abused word we have heard in last 3, 4, 5 years, digital transformation. But when you have to go back to the board talking about, what transformation, is it the product, is it the technology or the platform? How do you define the digital boardroom success in terms of transformation?
Yeah, see, typically when IT is driving digital transformation, the expectations that we capture are the expectations of the CXOs. So they are more towards the operation of the organization, right? But when it goes to the boardroom is more focused towards the governance and the growth aspect of the organization. So for them, whatever success criteria that we have defined as a digital transformation journey is more focusing on the operations, which is not of their focus areas. So they try to look at what is this digital transformation going to give me as an organization in terms of better governance, in terms of growth, sustainability. So whatever outcomes that we are going to define for the digital transformation journey, it has to resonate at the board, right? They would not be much interested to look at KPIs like operational efficiency, bringing in automation, bringing in some customer experience. Those are given aspects of digital, right? But what they would look at is how would my organization look after having this digital journey? Is it going to impact or touch my end consumers, customers, clients, the entire ecosystem? So for them, the digital transformation journey should be reached out to the level of interaction to the end consumers and customers. And it should also ensure that the digital use is responsibly used so that it does not impact the overall governance and compliance of the organization.
Correct. Pinkesh, similar question to you. How do you define the success of digital transformation in a boardroom?
So for us, it's, to be very frank, when I was looking at Boardroom, the Boardroom before COVID and Boardroom after COVID, it has actually changed a lot, okay? Previously, I used to go in a boardroom to ask for more money. Now I don't have to do that. Now, when the discussion is happening, it's about what we are doing to improve our products in the market. So whenever such kind of questions are coming, which means that they are looking at IT to improve the technology part of it, the digitization part of it, the cloud journey to cloud part of it. So we have to explain them that how we can, as a technology leader now, can contribute to success of the company, because now we are not looked at as the only technology leader. Now we are looked as a business transformation leader, guys. And that's why it's very, very easy to ask for money. And their board is actually, if we educated well, they are really ready to spend, because they know the future is going to be like this. So the success criteria is what new we can do in our current business to make more profits, because our regular business is running as it is. How many clients now shifting from your regular business to a digital business? Because that for us, we are working with BFSI. We have seen digital banking is coming, open banking is coming, account aggregators are coming. So everything is happening digital. RBI is pushing towards digital. So for us, for me in the boardroom, it's very, very simple, to be very frank. It's how we can technology enable us to make more digital products, get more business revenue, and that's how the success criteria is being measured right now. And to be very frank, nowadays it's much more easier for us. Now we are already, because we expected digitization to happen in 2030, 2035, it has actually preponed 5 years ahead, right? Now, because it has preponed ahead, we are already started talking about AI, Gen AI, how we can do it much better, how we get much faster. But when we look at it, the toughest part for me is when we are looking at it, the ROI, the return of investment and everything. The toughest part is, are our teams ready for that? Are the employees skilled to go for the digital journey? Are they have sufficient knowledge? Can we invest in training? Those kind of discussions are more important. Security discussions are more important, because if you want to move to cloud, how secure they are, because we are a regulated company and all. So those kind of discussions are happening right now. And if we are able to answer to that, that's how they are measuring the success of it.
Right. So in my days, we used to call it as RTB, TTB, ITB. RTB, run the business; TTB, transform the business; ITB, innovate the business. And then the post-COVID, the entire thought process changed. And I think we'll take that blessing in disguise, because that advances us 5 years on the digital transformation journey. But with digital comes the risk on security. We heard data is the new oil. Anybody who keeps the data is more valuable organization. But data needs massaging and it needs insights. But with all these actionable insights, data, also comes the risk of cyber. We all say technology is a double-edged sword. Now comes the question on cyber. So Rajeev, cyber resilience, we talk about, but digital risk are being factored into the board level KPI discussion, because the board, while you are being embarked on the journey of digital transformation, but they're also very worried about this digital ecosystem, connecting your partners, customers, vendors, everybody. How do you see all of that? How do you bring this cyber resiliency and confidence to board on this?
Yeah, as it is very rightly said that we are advancing the technology, and board is also recognizing it, and my fellow panelists also talked about it. But cyber is definitely very important, and board fortunately is also talking about and quite vigilant about it. Also, this is supported by the regulatory environment, because a lot of changes happened in the regulatory side, irrespective of any sector. So, with the digital ecosystem, the threat vectors are also increasing continuously, which is also a concern point for the board. And almost in every board meeting, this is a talk that what we are doing for the cyber resilience. Not only that, the cyber, this is being talked about, the makes cyber resiliency as a part of the business strategy. It cannot be away because the digitalization is supporting the business and of course the data safeguarding from the cyber threats as well as from the data protection. Both sides, it has to be part and parcel of that. So cyber resiliency is a part of the business strategy and the cyber strategy is also part of the business strategy, and there are various KPIs. For example, what are our risk maturity with respect to cyber resiliency? How we are monitoring it, how the ecosystem is designed, engaging all the key stakeholders, being a part of the cyber protection. Because the cyber protection or data protection is just not a subset of tool, but also by the people, the key role to be played by the people. So how it is being taken care? What is the awareness program for that? And what is the risk? Suppose if we don't do this, also to be factored. The response time, if let's say if there is a cyber incident or if there is any such kind of attack, what is our response time to recovery? Okay. How we are doing it? What is the exercise? Whether we are doing the proactive measures in this, whether we are doing a drill properly or not. Many such questions are coming and forming a part of a discussion. And it is being also asked, okay, convert into a proper manual or operating system or operating practices and monitor it regularly.
Correct. Well said, Rajeev. I think you brought a lot of points on this cyber resiliencies. I was part of a bank where I was extension to the CISO office, and they put me in the boardroom and says, so the director, one of the directors, independent directors in the boardroom says, how secure are we? How confident are you guys to tell me that my data is secure, right? And we have the room full of all CXOs. I have the CIO, CISO, CRO, CHRO, everybody was there. And not even once was anybody able to tell, no, we are fully compliant, we are fully resilient. They have the risk team, they have the operations team, they have the security teams. We know that, the cyber security is again a double-edged sword. I think in the evening when Subhash was speaking, again, digital risk is ever evolving. And with the introduction of Gen AI, ChatGPT, a lot of other those tools, while they are blessing in disguise of helping automate a lot of your efforts, but then there is the other side of the story also, where I very quickly can possibly poison the LLMs, right? I can desire output which cannot give it. So those are tricky things happening on the cyber security resilience side, and my understanding working with multiple customers on different domains is you please continue keep checking back upon your digital risk KPIs every 3-6 months. To ensure you are updated with the latest trend factors, tools, factors. Martin, you and I work in very similar domains, and Cash is one of the largest fintechs, and you do a lot of work on cyber security here. Now, before I talk about the KPI which we were talking about, but the best capture value creation on the digital side. How do you emphasize this? The customer engagement, the revenues which are coming from digital platforms, how do you define those cost savings altogether?
Yeah, well, I guess my fellow panelists and the distinguished members would strongly agree, right, that cyber security is moreover not a buzzword, and cyber security has moreover moved into transition from a technical function to a very core business function. And talking about digital value creation, which is obviously tuning technology to enable business growth, right, rapidly. And the board, the top management obviously expects that each and every penny is quantified. Now, how would you evaluate whether the digital value creation is going on the right track? Now, as a CISO and as a senior member who gets to talk to founders, to the top management frequently, I would moreover emphasize on 3 major factors. That is one, obviously the customer adoption. Second is the financial impact, which you moreover mentioned, right? And third is obviously the resilience, the risk factor. Now, the customer adoption is obviously as a digital product or as a platform, it is moreover relying on how much customers you can bring in or how can you manage your existing customers. So that talks about the customer adoption. The financial impact is obviously whether how much is the cost savings which you can bring, the revenue factor which you can bring to your digital factor. So these are three major key factors, I would say, as a KPIs.
Right, and Martin, again, this brings me to a very good use case study I talk about. You know how banks in US open physical branches? They do a survey of a specific area to look at what is the spend in the area of their customers in those ATMs which are opened directly by them, or people having their debit or credit cards issued by them in different other ATMs or branches in US. And based on that survey and the collection of that data, they decide that in this location or vicinity, do we need to open a physical branch? Will it help my customers who are coming physically in that location? So the point what Martin was talking about, how do you create your digital value creation, because everything is going digital. So do I need to go physical or digital is where the digital value creation board is also asking to make. That's what is a lot of stuff happening. Plus, I think the stickiness to the product when you are onboarding a customer. If Encash was not a very good app to work upon, I would have gone to something else, no?
Now, the app readiness, now we can take an example, right? We are going to use Uber as an example. If we have one loading issue or a fraction of a second, we have Ola. We will switch to another product.
Correct.
The speed, the agility is vast actually. So I don't think digital presence is very key factor assessing.
And I think that loyalty is dying. It is more about impulsiveness. Either nahi chalta, 2 seconds mein I will go to something else. Right, so that's what at least I am also seeing. I don't know if you guys are also seeing. Makarand, out of the syllabus question, how do you see investors looking at the boardroom in terms of digital experience? You are working with various organizations, good track record of what we have done in past. How do you see what the boardroom is looking at, or from an investor's point of view?
Yeah, see, firstly, the digital transformation journey, the way the board looks at it and the way the CXOs look at it is completely different. The board is more focused on, say, what are the KPIs of the board, right? 5 out of 10 KPIs are revolving around ESG for the board, right? So for them, compliance is the topmost priority. For them, impact of the organization on the environment, on the society is on topmost priority. So how many digital transformation initiatives that IT is creating in the organization actually talk about these topics? None of them. Most of them are around operations and the CXO experiences and expectations, right? So it is very hard for the board to even look at these proposals as a value proposition, right? For them, nothing is there in this proposal because it is not covering at all the KPIs that they are looking at. That is for the board to look at. For the investors, even more serious. The investors today are no more only the financiers for the organization. They have a say in the boardroom. They have a very strong representation in the boardroom, and they are actually responsibly seeing how this organization is functioning in the given region. Is it making a positive impact or some negative impact is coming from the organization? So what they are expecting is whether your digital roadmap, your journey is covering all of these aspects. Is it covering ESG KPIs? It is covering CSR as an activity as part of the plan of the digital roadmap. So all of these areas which are generally ignored, because for us the financiers are the CFOs, the CEOs, right? But it is not the truth. The truth is the financiers are the board. Unless the board gives and go ahead, even the CEO and the CFO cannot do anything. So for me, the learning was when I am interacting with the boards now, is whatever we have been learning at the past and practicing as the best practices are no longer best for the board. The board is looking in a different perspective, so we need to understand that perspective and fine-tune our journey of digital.
Yeah, bottom line, money rules. Pinkesh, so similar, while what he said is correct. Fortunately, unfortunately, I'm a small-time angel investor, so I resonate with what Makarand said. Finally the money rules everywhere, while whatever we are talking digitally. But when you have so much of data available there with you, how do you define this? How do you define the balance between the short-term ROI and long-term digital investments?
It's a good question, Pankaj, too. And actually we are going through such kind of discussions on regular basis nowadays, because when we are talking about digital transformation, digital initiatives within organization, we don't want to invest and we don't want to take entire company to the cloud, or we don't want to do all products coming only on digital channel, right? We want to actually evaluate whether our customers are ready or not. We want to do MVP kind of initiatives as well, where we take some small initiative on digital channel, and then we want to see what the ROI and all. So what we have done is actually we've created a roadmap for 5 to 6 years, okay, and we have actually created in phases where phase 1 will do this. If that is fetching us sufficient income, which also means that our clients are also ready to adopt those kind of products, and then those kind of products can be taken to the cloud as well, which means our cost from CapEx to shifting to OpEx as well, right? So those kind of phases we have actually identified, which also means that whenever the revenue is coming, the same revenue we are reinvesting on the phase 2 as well. So that whenever we are talking to our investors or board, for them it's easy that okay, we are not asking for a huge money, but we are asking for a small amount of money, and then we are reinvesting for further phases, which also means that we are looking at future ready. We are looking at, okay, when our clients will be, entire client base will be ready, we will be ready as well. So we have actually planned in such a way. I think that's the best strategy, because if we are going full-fledged, we have seen that many companies are saying, okay, we shifted to cloud, now we are coming back to on-prem. Such kind of scenarios can happen, and we don't want it to do that. So that's why such kind of success. We have seen some stories which are successful. We have seen some stories which are unsuccessful. But we have taken phase approach. We have seen 3 to 4 phases which are successful, and we are continuing in the same journey.
It's a mixed match approach actually again, because when you work with large scale digital driven success versus short term ROI on digital, I can tell you a quick incident. 2 weeks back I was speaking to one of the largest insurance company, startup but very large, and I was speaking to the CIO, and he says, don't give me a solution which is OpEx driven. You take CapEx. You put $1 million, I am happy, but you tell me every month you will charge me 200K, I am not happy. The find is, because tomorrow if this company gets acquired, merged, my books, I don't want to show them OpEx. So whatever CapEx you take it, no problem, but don't show me OpEx. This is what I don't want. So that, short-term digital driven success versus long-term justification on the digital or the IT spend is becoming tricky. So I think you have a forward-looking approach, or you are inward coming back to on-prem. I think that is hit and trial happening across locations with multiple industries and domains.
Just to add couple of things more, we are also talking about a lot of new products are getting created because of cloud native, and we are going on, right? Time to market is getting much faster, right? So we are also looking at those kind of scenario as well. Of course, it is difficult to sell, but then board is asking that, are you getting locked in? What will be the lockout strategy, right? So the many questions which are still unanswered. If you ask me, people are evaluating. If we get locked in, what are the best possible scenario to get out as well? If something goes, the cost is going higher and all. So I would not say everybody has all the answers. We are still working on this. We need to get some answers, and I think in a couple of years we should be able to answer all those questions as well.
True. I think it's a journey or a learning curve for a lot of us. Rajeev, back to you. So we talked about a lot of business metrics, digital boardroom metrics, but we know the board guys, I won't say illiterate, but they are not tech savvy. They are money savvy, business savvy. How do you define this technology, digital metrics into a language which the boardroom can understand?
You as an angel investor also talk Okay, because when somebody investing money, obviously the top line and bottom line is the key. All these technology, everything is basically directly or indirectly driving it on. So whether it's a digital transformation or anything else, ultimate target is basically how the business growth can be achieved and how this can be contributing factor to support business growth. Now there can be different drivers for business growth. One is of course the taking competitive advantage, going ahead in the curve, taking a leadership in the market, satisfying customer, okay, because customer satisfaction is the key and everybody is talking about it, and which is also very important, as well as how the agility can be done. I mean, it's not a short-term approach, but it is a long-term approach. Let's say the X percentage of growth to be achieved, and what are those drivers which can be contributing towards that, and let's say we are talking with the IT people or CIOs or CXOs and CTOs. Of course, the CIO, CTO cannot go and talk in the technical jargon. As you rightly said, they are literate, they are very literate, but of course, they are not talking your language. You have to talk their language. Then the tuning can happen. Okay. So, for example, if you are telling, okay, I am the digital transformation journey, then I will do X, Y, Z, A, B, C. Then if we talk about, okay, these technological terms, nobody will be interested. But we'll talk, okay, we will do implementation of, let's say, Industry 4.0 or IIoT in the business language. This will support my 5% productivity improvement. The 5% productivity improvement can be directly or indirectly support top line and bottom line. This will hit the mind of code. Okay. There can be PLC, there can be sensors, there can be XYZ, all technology terms. Okay, this is IT terminology. But from business, how it is translating to the business outcome. So this is one aspect. Similarly, we'll talk about, okay, now AI is, everybody talking about AI, and fortunately this technical term is going in the board mind. But the board also talk about AI. Okay, so here I would say it's not a technical term, it's a business term. Because people at the personal level are experiencing it. Lot of consultants are playing good game and good support to IT team. Okay, so that everybody is talking about AI, but how AI can be helpful. But again, the business language is how it is going to support my business growth. Whether it is a customer experience, whether it's a differentiating in the marketplace, whether it's a competitive advantage, or whether it's an early mover advantage, whatever way, converting it to this. So suppose if I say, okay, fantastic, I have a very good ecosystem for the cyber security, okay, this is good thing, but how to translate in the business language? The business language translation is saving 100 attack is not attracting to anyone. Saving attacks which is contributed, if the attack would have happened, there can be $10 million loss. So it is a saving of $10 million loss is converting to the business language.
Correct.
So these are basically various examples that we talk about from the business outcome perspective using the technology. It goes directly and every board wants to listen that rather than technical journals.
You're very well said, Rajeev. I think this was the similar conversation we had like a couple of years back when the automation was coming in, right? Are we improving operational efficiency or are we improving business productivity? One of the pillars is moving or not. Hence the request for additional funds, money to deploy tools, products, etc. was needed. Martin.
And one or two more examples, like many people talk about Salesforce automation. Okay. The Salesforce automation, putting up CRM, putting up this XYZ, putting up a mobile app, this tech app, okay, this will be a real-time experience, people can go and see the real-time information, okay, this is all good from the facility point of view. But from the business outcome point, a tech-enabled market. Maybe by enabling the tech, we can increase the 20% customer retention ratio. Okay. By this tech enablement, we can generate 20% more leads.
Yes.
I'd like
sure.
to add something here, and I completely agree what my fellow member has said, because if you remove the technical jargon and put it in a very quantitative business matrix, in a matrix level, with a very simple dashboard level, I guess it would be very easy to communicate to the board. Because as this is so, you're right, now I can put an example. Beginning of the year, before the company starts the revenue, I go for my security budgets, which involves a firewall requirement, antivirus requirement, EDR solution, SIM solution, IDS, IPS. Now, how do you communicate this to the board? Now, if you put a very simpler term, as sir rightly mentioned, right, if you are able to highlight the cost of the investment versus the cost of the impact, if you are able to highlight that in that very simple term, I guess it should help and make sure that the tech and the non-tech business can work together.
Correct. And the key word to quote is the risk.
Yeah, yes, risk.
Right? And that brings me to the next question to you only, Martin, that, while these are the tangible metrics to measure, there is a lot of something called as intangible metrics like customer trust, innovation, resiliency. We are already talking about it. How do you, build this? How do you define this while doing the justification to the board?
Yeah, you see customer trust or brand reputation. Now, brand reputation goes beyond numbers, you cannot quantify that. Now, while obviously, as you mentioned, right, the customer trust, these are all intangible aspects, but yes, they do have some factors by which you can quantify these aspects as well. There are proxies, we call it as leading indicating factors, right, which you can quantify these aspects. Now, customer trust, we can talk about, we can evaluate your product by complaints ratio, security complaints ratio, how many security complaints the product has received for the last year, which you can convert into a quantification. You can convert the issues, frauds or losses per transaction. What was the incident per transaction or incident per feature? So these are the few indicators which you can help evaluate customer trust. And when you talk about the resilience or the uptime, obviously there are multiple technical factors. Now you can call it as, we call it as MTTR, mean time to detect, mean time to respond. You have uptime matrix, right? You can make sure that what is the uptime of your product, what is the availability factor of your product. So these are few factors which we can help evaluate intangible aspects as well. When you talk about innovation factor, now we can judge and we can evaluate as per the release velocity, how much new features you can chip in to your product, how fast you can chip in to the live environment. So these are all some leading factors which can help evaluate intangible aspects as well.
True, true. I think well articulated conversation, but in the end, the summary, I think what I would like to say in few words is this, navigating this digital KPIs in the boardroom, I think it has to be an equal balance between in a rock root fashion versus what money and investments you are making versus the justification to what you are bringing. Today it is about value creation rather than, in the startup world we use terminology called as valuation. So if you work upon your value creation, I don't think the board has any issue in challenges in, justifying the spend. And if it is done rightly and you have the right KPIs, KRIs defined with right process, skills, team metrics, mapping of all of this is done, I do not see, today board are already forward looking. They have the risk appetite to do that, but they are also looking at, is this every single dollar nickel dime has been spent properly or not. That's where the question of risk and governance which will come through. Thank you, all of you. I still have 5 minutes left. Any questions from the audience? Happy to take. Okay, none. Thank you. We are ahead of time. Thank you so much, guys. Thank you so much for the good session.